Let me welcome on board A.S. Sani, the chairman at IOC, joining in on the show right now. Mr. Sani, great to have you on the show with us. And firstly, wish you and your entire team at IOC a very happy and prosperous new year. To begin with, Mr. Sani, I want to talk about crude. It's been more or less stable all through past year. It's fallen marginally around 4 to 4.5% or so in the quarter, however. How do you see GRMs play out for you in this quarter?
First of all, to all your viewers and to your team, a very happy New Year 2026. We are very happy to be here. Regarding the crude prices, I can detail it out into three parameters. First of all, you are aware it is demand supply, and the demand is rising by at least 1% or so universally. We are saying because it was 103 million barrels per day 24-25, and this year it is increased by around 0.8, and IEA says that next year also it is going to increase by again another 0.9. So around 1% or so it is increasing, and supply is there. It is not a supply deficit situation that we are looking at. So demand supply wise, rates of crude are pretty comfortable. Plus, as compared to next year, same time, we are sitting at around 10 to 12 to 13% lower rates of crude per barrel as compared to last year time period to this year time period. We are talking of average rates or so. And these are driven by, you are aware that so many geopolitical issues, trade issues, wars, all these have their effect on each barrel of the crude oil that is there, and each dollar that we spend for bringing in that crude oil. So these are the parameters. Yes, as you rightly said, that it is down by 4 to 5% marginal level, and we expect as things cool down universally in the geopolitical level, there is a potential that it can still go further down. That is our assessment, that today we are sitting at around $60 average, give and take $1-2 here and there. We are expecting that it might come down to another mid 50s or something, or late 50s, 55, 56, 57. That is where I think it will settle down in the new calendar year that we are seeing today.
Okay, Mr. Sani, hi, this is Harshya. In the last few months, we've seen OPEC's raising output. The impact of that has not actually followed through, and I think that's one of the reasons why you're seeing the prices, or you're saying that the prices may actually fall in the new year. How is gross refining margins for refineries doing? How is that piece? And how are the cracks for various products doing? Are you able to get better refining margins?
Actually, it is a balancing game for a company like Indian Oil, or for OMCs of India, that is Indian Oil, HPCL and BPCL. We are doing on a total basis, because there are two major portions of the profits that are coming to the company, is refining margin and the marketing margin. So today refining margins are better. So my standalone refineries, they will be very much better placed today. We are also earning a good GRM today, but we are not getting that healthy margin on the marketing side. So this is a balancing act, and that is a benefit that we have for being a full-scale oil major in India, so that if we lose on one side, we get on one other side, and that's how we try to balance the balance sheet hour. That is how we are working right now. And today, yes, you are saying the refining margins were pretty good. Now they are tapering down. In diesel, you are aware that they went up to $28, $25 to our crack went up to $25, $28. Now it is coming down again to 20, 22 levels. So we don't know where it will settle down. But the conditions we know, the factors that are affecting these margins that we are aware of, as things cool down with the Ukraine, Russia, but I don't know how they will escalate between Venezuela and other US, and then how Israel and Iran turn out, and then how other geopolitical issues turn out. They will have their effect on these parameters.
Mr. Sani, such a pleasure speaking with you today and getting in all that insight on IOC and the industry. And thank you very much for your time today.